You got to be flipping my flapjacks, folks. Do we have a lot to get into in this video here today? Boys, it's going to be a busy one. So many things to talk about in today's video, including the top of this video, which is around this huge influx of people buying call options basically on the VIX and expecting the market to absolutely tank, volatility to skyrocket. We're going to talk about that. A lot of stocks to discuss in today's video. I mean a lot of stocks. We're going to talk about a lot of stocks, whether I view some of these stocks as buys, not buys, talk about some company earnings, if I thought they were good or not good, show you some important statements, some SEC filings, things like that. So yeah, a lot to get into in this video here today, folks. I appreciate everybody that subscribed to the channel. Thanks for being here. Also, I do have to talk kind of quietly. I'm on baby duty right now. We got a baby in this house. The baby's sleeping, okay? I don't want to risk waking that baby up right now, okay? Not right now. After the video, that's fair play, okay? But not right now. So appreciate y'all. Thanks for joining me as always, okay? So first off here, I started hearing about this stuff about 24 hours ago or so, okay? Everybody started kind of sending me some stuff in relation to this, right? Investors are bracing for surge in market volatility. Bets on a rise in Wall Street's fear gauge swell to the most since March 2020. So this is the type of stuff I started hearing, and I was like, what's going on here, okay? So I kind of wanted to check some of this stuff out. And we're going to come back to this chart in just a moment here, okay? Fear is creeping back into the stock market. To protect against the potential downturn, traders are scooping up hedges at the fastest clip since the onset of Rona. More call options betting that the CBOE volatility index, the VIX, will rise have changed hands on an average day in February than any time period since March of 2020 data. And once again, we'll come back to that chart there, okay? After lying relatively dormant for months, the VIX, also known as Wall Street's fear gauge, rose to 23 last week, its highest level since the first few trading days of the year. Readings below 20 typically signify complacency, while those above 30 signal investors are scurrying for protection. Now, the important part of this is, okay, is if people are playing the VIX, basically they're trying to bet that the stock market's likely going to tank, okay? Because usually every single time the stock market tanks, usually you get a huge spike up in VIX. At least I've never seen it where the stock market hasn't tanked, and you didn't see the VIX go at least to 35 or 40 or sometimes even 50 plus, which is a pretty extreme situation, okay? Now, the important thing of this is, okay, I was expecting some like crazy number, and I don't really see that crazy number being here, okay? It's higher than usual for certain, right? But it's not like it's like, oh my gosh, I can't believe it's like off the charts or something like that, right? Now, if we go back here and we look, right? So this is February here, right? So we got January there, we have December there, right? Then we have November here, and we have October here. Now look at how many people were also playing that the VIX was going to spike up. Right here, right? This was a much higher number than usual. Guess what? The VIX never spiked up, okay? So when you see something like this, you might think, oh, somebody knows something, like it's going to have to be crazy. No, this was a record. October, we can go back to October right there, right? That was a record since Rona. So articles could have read, right, at this moment right here, the call options on the VIX hit the highest level since March of 2020. And look what happened. Actually, the market bottomed in the month of October, right? And then started to trend up from there. And so when you see something like this, don't automatically think these people are correct, because they've been wrong plenty of times before, right? And I think another reason a lot of people are trying to play options on the VIX right now is just, you know, you have a lot of fears out there. I'm sure you guys have seen a lot of videos, mainstream media, around kind of what's going on in China in relation to the U.S. and, you know, us having some ships in the region. And it's kind of weird. Like, it seems like the United States almost wanted the military kind of wanted to do this, like, scare tactic of, like, you know, showing what the U.S. military is up to in the Asia region right now. It seems like it was kind of almost coordinated and planned out as far as all that goes, right? And so you have that going on. You have obviously fear about what if inflation comes in hot again next month, right? And then everybody starts to be convinced that the Fed's going to have to raise 50 or 75 basis points to continue on here. So naturally, you know, it's kind of natural that people are kind of thinking maybe volatility could get rolling here. It doesn't mean they're right? Now you see something like this out of Mike Wilson, right? He says the stock market right now is pure FOMO at its best, okay? He's a chief U.S. equity strategist and chief investment officer at Morgan Stanley, right? And yeah, he thinks this market is kind of like in a FOMO mode, right? You know, here's a 3-month of the stock market. Does this look like a FOMO market? In all due respect, does this look like a FOMO market to anybody? The S&P 500 is down 0.6% in the past 3 months, okay? Let's look at the past 1 month. Maybe in the past 1 month we've been in FOMO mode. This is a 1 month chart of the S&P 500. We're down 2%. In all due respect to Mr. Mike Wilson, okay? I don't know if he's ever seen a FOMO market. Maybe he's like brand new to the stock market and he thinks down 2% in the past month and the S&P 500 is FOMO. But as somebody that was in a FOMO market, 2 years ago, I can tell you this isn't a FOMO market. This is the furthest thing from a FOMO market that we're in at this point in time, okay? I've been there. I've seen that. I've seen multiple crash markets now, right? The market I got started in, 08, 09, complete collapsing market, right? March of 2020 market, complete collapsing market. December 2018 market, nasty, nasty market, right? And I've seen those markets. And I've seen one FOMO market. And I can tell you, this ain't it. Okay, this is not the FOMO market, whatever this Mike Wilson thinks. I think just a lot of times these guys make these predictions that the stock market's going to crash, and then it doesn't crash. And so then they're trying to save face, and so they're like, oh, it's just ridiculous. It's just FOMO. It's just FOMO in the market right now. It's like, dude, pull up the S&P 500. Tell me that's a FOMO market. Tell me that's a FOMO market. What are you tripping on, Mike Wilson? In all due respect, man. Holy smokes, ain't no joke. I don't think it's hard to get some of these jobs on Wall Street the more I think of it. I really don't, okay? Now, I'm sure you guys have seen the market's all red today, right? Dow, this is Mike Wilson's FOMO market apparently, okay? Dow is down over 200 points here today, S&P, NASDAQ down as well. But there's some stocks that made some very interesting moves, starting off here with Meta here today, okay? With all the indexes red, you would have assumed Meta would be down today. It makes sense, right? This stock wasn't down. Not only was it not down, it was up 3%, right? We were up $9,828 just in this account on Meta here today, right? So what's going on with Meta? Well, this came out, okay?
Are you the person who supports your family financially? If you are, you've probably thought about what if something happened to you? What if you were not here to support your family? How would your family be supported? It's a concerning feeling. As a father of 3 and the one who supports my family, I have certainly thought about it. This is where life insurance comes in hand, and our sponsor for today's video, Fabric by Gerber Life.
With Fabric, you can help protect your family's financial future in case the unexpected happens. Life insurance used to be complicated. You'd have to find an agent, take time off work for long appointments, and the whole process was just really time-consuming and daunting. But Fabric makes it easy and transparent for you to get a quote on term life insurance in less than 10 minutes. Fabric makes getting a quality term life insurance policy quick, easy, and super affordable. Their new lower prices mean significant savings over other providers. They offer high quality policies like $1 million in coverage for less than $1 a day. And you could be approved on the spot with no health exam needed. And if you aren't fully satisfied, Fabric has a 30-day money-back guarantee, and you can cancel at any time. Apply today, and in just 10 minutes, you can give your family the secure financial future it deserves. Protect your family today with term life insurance from Fabric by Gerber Life. Don't put it off. Trust me, you'll be glad you did, and the peace of mind is worth everything. Apply today in just 10 minutes at meetfabric.com/holysmokas. That's meetfabric.com/holysmokas. Bank of America listed their stocks that stand to benefit from basically artificial intelligence. There's a lot, obviously, if you want to talk about some hype and actual excitement in the market, it's really around AI right now, okay? That's really the only place that has any hype or excitement around it is artificial intelligence. And so they listed off all these different companies, right? Microsoft, Google McDougal, Meta was on that list, right? Apple, Baidu, NVIDIA, ASML, Taiwan Semiconductor, right? Which, I don't know, whatever. Artista Networks, I guess we'll just throw every stock on this list. Adobe, Shutterstock, Nice Systems, SAP, and this company, and then, which I'm not familiar with, but then go to Palantir, okay, on there as well. And in regards to my thought process on this, I mean, Google definitely in the AI race, right? Meta for sure. I don't think enough people think about Meta in the AI race, right? Microsoft, since they made their investments recently over time in obviously OpenAI, right? NVIDIA, obviously direct play. on AI over time, right? I'm surprised I didn't have AMD on this list as well, and definitely I view Palantir as a straight AI play there, right? And so this is obviously kind of building into this excitement kind of for Meta right now, right? Now, the interesting thing is, this was announced that Zuckerberg's launching this top level team at Meta to develop AI products, right, for WhatsApp, Messenger, and Instagram. But I'll just be honest, they've been working on this. Like, this isn't new. If you own Meta stock, you know about this. They've been working on AI for quite some time now. You can go back several conference calls and listen to them talking about AI. So it's just funny this comes out, and Zuckerberg kind of brands it this way, and mainstream media kind of runs within that. All of a sudden everybody thinks that like Meta's like new to AI or something like this. They've been working on this for a while, man. This is where a lot of their money's been going. People think they've just been spending crazy money on Metaverse. Metaverse is just one thing they've been spending crazy money on. The other is AI. And I just think that's forgotten, and all of a sudden everybody's realizing, oh my gosh, Meta could be an AI play as well. Absolutely it will be, right? So, yeah, that's just, mind-blowing, but whatever, it is what it is, and Meta makes a 3% plus move today on a day when the markets were down. So congrats to all fellow Meta shareholders out there, okay? Revolve, also a lot of strength here in Revolve stock here today, which is an e-commerce company that I own, obviously. It's done very well in the past, and I've taken some incredible profits on this stock, and now I'm actually in a buying territory again with Revolve for the first time recently in quite some time, right? But yeah, almost a 3% move here today in regards to Revolve. But the interesting thing is they came out with earnings recently, okay? Not today, but they came out with them recently. And as far as their earnings went, they were really good. GAAP EPS beat, right? But revenue also came in at almost $19 million above what Wall Street was expecting. I can tell you, for a company like Revolve to beat by $19 million, this is a smaller company, so that's a huge beat. If this was Apple, this was just, $19 million, just a rounding error at the end of the day, right? But when it comes to Revolve, that's a pretty significant number there. So Revolve's a stock I continue to like and love for the long term. I want to continue to build out my position. So if anything, I kind of hope it goes down, but obviously showing real strength, for these stocks to move like that on a down day for the market, it's very, very impressive, right? Check this out. I think this is very important for everybody watching this video right now to understand this, okay? The stock is very undervalued right now when it comes to Revolve, right? You're looking at a company that, in my opinion, is going to grow revenues 10 to 20% a year. 10% on a bad year, 20% on a really good year, in my personal opinion, okay? And they should continue to grow EPS quite substantially over time. This is what analysts are expecting. 19 analysts cover for 2023 numbers, 2024 numbers, 18 cover, and expect to show nice reacceleration of EPS growth over the next couple of years as well. So, you're getting a company that should be able to grow, in my opinion, top line and bottom line, double digits per year, almost every single year for, as far out as the eye can see right now. And that makes it a very attractive stock when you're talking about a stock that trades with a forward P of 20-something in front of it. Like, Coca-Cola, Pepsi, companies like that trade for forward Ps of 20. So for a company like this, I think it's just significantly undervalued, and that's why I'm looking to add this position. Again, this is in my opinion, this stock will go back to where it used to be, all-time highs, over the next few years, and then it will go to a lot higher numbers than where it used to be. And all that cash flow they're going to throw off, they're going to be able to do some huge share repurchases if they want to go that route over time, or just spend a lot more on, obviously, marketing, advertising if they want to build their brand bigger, or end up buying other companies in the e-commerce space, okay? There's a lot of different routes they can go there. Now, something else interesting, check out the dividend account today. This account was green. All the indexes were red. This one was green, almost 1%. So you're talking about insane outperformance from the dividend account here today, $1,600. But some very interesting stuff happened inside the dividend account here today, okay? One was Wynn Resorts, right? Which is a pretty significant position. This is a controversial stock for me to have in my dividend portfolio, since this stock does not pay a dividend right now. But this Wynn's a long-term dividend payer, and I believe they could bring back the dividend as soon as by the end of the year if they really want to, okay? But this one, look at the move here today. 3% plus upward move when the indexes were all red here. And this one has been coming back and showing a lot of strength here recently. But the interesting thing with Wynn Resorts is, obviously with Macau, everything's becoming finally good news, okay? If you don't know, Macau had basically had bad news for almost 3 years straight, ever since Rona started to take off in China in December of 2019 and into January of 2020. Ever since then, Macau's just been nothing but bad news for the longest time. But just over the past couple months, finally getting good news in Macau again. And if this trend continues, the Wynn properties in Macau will start throwing off crazy cash flow again. They'll start reporting some unbelievable net income growth over the next few years if we can just keep China open, man. And so the hope is now, like, China's actually for real opening their country back up again, right, over the past couple months, and that trend should continue. Macau should fully recover over the next 1 to 2 years, and Wynn's net income should go to the moon again. Their cash flow should go to the moon again, and the losses they've been taking over the past, couple years, 3 years really, should go away, okay? And we know their Las Vegas business and their North America business is crazy healthy right now between their Boston properties or their Las Vegas properties as well. So, then there's also rumors, okay? And there are rumors that Wynn could potentially sell to somebody. I'm not sure how valid those rumors are. Just to be honest, I have heard those rumors out there from a few places now at this point in time. So I don't know, okay? I don't think Wynn should sell. I don't think Wynn, and if Wynn does sell, I wouldn't sell for anything less than $200 a share if I was Wynn. Get at least $200 a share if you're going to sell, but I wouldn't sell. Not right now with Macau coming back online and everything like that. So we'll see what happens. There could also be some sort of deal where maybe if they were to sell, they sold the North America business to somebody, and then they also sold the Asia business to somebody. There's also potential land deals they could do, which a lot of the Las Vegas providers have done recently, where they sold off land in Las Vegas to other companies and actually the buildings as well and got all that cash flow. I don't know. There's a lot of avenues. Maybe Wynn's just exploring a lot of ideas, and that's how these rumors started, because, different people find out different things, and then these rumors come out, and you don't know what's real and what's not real, right? So maybe it's just Wynn's exploring a lot of ideas there, and everybody's getting real excited about it, which, it isn't just another reason to kind of explain the strength of a 3% plus move on a day when the indexes are all red, right? Target came out with earnings here. This is a stock I really want to go down, okay? It's not the size I want it to be. I want this to be a multi-five-figure position, okay, in the dividend account, meaning $20,000, $30,000, $40,000 position. I really want this stock to go down in the short term, but unfortunately, they reported earnings, and it did go up. It went up 1% here today, right? And looking over the earnings, I saw a few interesting things here, okay? First thing is, comp store sales, they actually increased year over year. I think that's impressive considering how tough the comp was. They were coming off an 8.9% number Q4 2021. That's insane, tough comp. So I do appreciate that. Now, inventory, I thought this was interesting. Inventory at the end of the quarter was 3% lower than in 2021, despite an increase in early receipts compared to last year. Inventory in discretionary categories was approximately 13% lower than a year ago. Okay, so Target's running inventory really lean now at this point in time, as almost all these retailers are, because a lot of these retailers got hit with way too much inventory in 2022. So what ends up happening, as you've seen what happened with the Fed, right? The Fed screwed up. They kept rates way too low, way too long, right? Then they had to raise rates to the moon, and then we can make an argument that maybe they're going to go too far. Who knows, right? But the same thing can happen with companies, where a company has an inventory glut, right? They have way too much inventory over a year, which was last year, right? And then this year, they might not have enough inventory, because many times companies and people, they go to extremes, right? Maybe you were in all growth stocks, you got destroyed by growth stocks, so then you flip all the way to value stocks, right? Or vice versa. And so this is just natural what happens with companies and humans over time. And I do have to worry that Target's running their inventory too lean right now, okay? And I just show you some screenshots of just a few companies I own, right? Elf, which is my best stock over time, right? At least in the past number of years. If you look at this company, there's outs everywhere. Now, keep in mind, these products are stupid popular, like ridiculously popular. But at the end of the day, man, I see outs everywhere. And by the way, look at this brand, outs everywhere, right? And I can tell you that brand's not popping like Elf is popping. So what's the excuse there, right? Look at this Elf section here, okay? Just look at the outs. Like, as somebody that used to be in the retail industry, all I see is missed opportunities everywhere here, okay? When I look at all these outs, look at all these outs. Outs, products are out all over the flip and flapjack in place. Literally, all I see when I see that is you're missing revenue, because I can tell you there's people that are coming to check for these products and coming to buy these products, and they're not able to buy them because they're not on the shelf, right? All I think about is, where are these products at, right? I mean, just look at the outs. There's outs everywhere. All it is missed opportunity. And so I worry that Target's running inventory too lean at this point in time. And I don't think this is the only retailer that has this potential issue, okay? You know, we were at Nordstrom Rack. I hadn't been to Nordstrom Rack in a long time. Nordstrom's also another company I own in my dividends only account. And they had a lot of products that are out. And I was just like, geez, they're running inventory so flippin' flapjack and lean right now. So lean, okay? And my wife, she couldn't find anything. She's like, there's nothing here, right? And so I do worry that a lot of these retailers are going to miss out on money because they're running inventory too lean, because they got burnt last year. And so this year they're going in so lean. And it's a concern of mine, actually. I'm worried about these retailers running inventory too lean in 2023 versus last year was too much, right? Now, if we take a step deeper here into Target numbers, we're going to find some extremely troubling things, okay? And I mean extremely troubling. So net sales up 1.2%. Okay, we'll take that, okay? Not great, but we'll give it a green, okay? Issue is, look at cost of sales, up 5.2%. Revenue up 1.2%. Cost of sales up 5.2%. We don't want to see that, okay? SG&A, right? General and administrative, up 2.5%. So both these numbers grew at a faster clip than sales grew. 1.2% versus 5.2%, 2.5%. So just when I see that, I already know net income is going to be a disaster. I already know it. I mean, there's just, if you're going to have that sort of situation, net income is not going to be in a good place. And sure enough, okay, $876 million net income came in at for this quarter versus the same time last year, $1.5 billion net income. Okay, that's a 43% down number there. Incredible, right? And so for Target, 2022 is a year to forget. It's a year to forget. They did not do a good job of running their business in 2022. Bottom line, okay? They have a lot of work to do here. They got, to just run their business on a much, much, much better level in 2023 than 2022, because this is just, for a company like Target, this is unacceptable, man. There's a lot of other companies in the market that could get away with this, but I can tell you, for a company like Target, this is unacceptable, okay? Now, Rivian, I don't know if you guys saw, their earnings came out after hours, and the stock's moving down about 7%. Now, the interesting thing with Rivian is, I don't really care about Rivian, the company, I'll be honest, okay? But it does matter for one of my personal investments in a pretty substantial way. And it can completely change my company's net income and EPS. And that company is Amazingzon, okay? And so because Amazon has a major investment in Rivian, because of the way they do GAAP numbers nowadays, which I don't agree with this, but it's the way you have to do it nowadays on a GAAP basis, okay? On a GAAP basis, Rivian can negatively or positively affect Amazon's EPS and net income substantially if the stock moves huge. So now I have to, as an Amazon shareholder, I have to keep an eye on Rivian to see what their stock price does. Because based upon their stock price, it can literally cause Amazon to miss or beat on a GAAP basis for their earnings per share. Okay, so it is what it is. It's the day and age we live in now at this time, but I do have to keep an eye on it, right? So Rivian was $17-something entering this year, okay? Right now it's going to be, after hours, $17-something a share. So as of right now, it shouldn't affect really negatively or positively. But by the time March 31st hits, you got to understand, like, if Rivian stock is down in a substantial way, it could pull down Amazon's numbers from where it started the quarter. If Rivian stock's up in a substantial way, then basically it will boost Amazon's EPS and net income. Once again, I don't think it should be done that way, but it is what it is. We got to play the game by the rules. We got to play the game by it, right? And so Amazon, very attractive right now, right? As far as me with my main account position, this is a public account here, I'm up to 282 shares in the public account now at this point in time, $64,000 position. I want to be down in this position this entire year. If you ask me my wish for Amazon, it's that I'm in the red this entire year. This is my year to build out Amazon. I've never been able to build out a good sized position in Amazon ever, okay, ever. This is like, I look at this year as my opportunity. And so my hope is that this position's red this entire year, and I can just load the boat on Amazon shares like I did last year with Meta, right? And just add shares like crazy, and get that position to hopefully be a position by the end of this year where it's a $200,000 to $300,000 position that we take into the future. And then from there, Amazon can grow into a $500,000 position or $1 million position over time. So that's my hope. I hope it stays red this entire year, and that just is what it is, okay? We'll see what happens there. I wouldn't be surprised if as the year ticks on, more and more momentum builds in Amazon, and at some point in time, we'll probably turn green here. But my hope is it stays red this entire year, okay? Now, Monster reported earnings after, which if you know me and you know my history, I used to own Monster before my days on YouTube. It was one of my better stocks back in the day. It was a high growth, obviously energy drink company, right? I even owned it back when it used to not be called Monster. It was called Hanson's Natural Beverage, right? The stock did me tremendous, made a lot of money on the stock. It was amazing, okay? But this is a stock, whenever I sell out of stocks, right? Even if I'm not in them for years, I still just keep an eye from a distance, okay? In Monster, I do keep an eye on this. Great management team, great brain, great products, right? And so I keep an eye on this company from a distance. And, you know, it's moving down 6%. I can tell you, I'm not ready to buy this stock, okay? Not ready to buy this, okay? First off, Monster's at a different day and age for this company. The high growth days, you know, and the crazy runway this company had back when I was investing in it, which back when I was investing in this company, I don't know, the market cap might have been $3 billion or $5 billion, the market cap back when I was first buying the stock, okay? It was a small company. It wasn't even like a $10 billion market cap. It was a much smaller company when I was first buying this back in the day. Now it's a $50+ billion company. It doesn't have the sort of runway nowadays that it had back then, but it still is intriguing. It's still a great company, but they do have a couple issues, at least in the short term, okay? One is Celsius. Celsius is a major competitive threat here in the short term. Is Celsius a long-term competitive threat? I don't know. That remains to be seen. The only main serious competitive threat Monster's ever had over the long term has been Red Bull. I've seen a lot of energy drink companies come and go over time, and Monster and Red Bull just remain the main players in that space, okay? And so Celsius is a short-term major competitor, could be a long-term major competitor. We'll see what happens there. And so that at least is going to hurt Monster's business at least a little bit, okay? And actually, this is a competitive threat in the short term as well. Is Prime a long-term serious competitive threat? I don't know, okay? But I can tell you it is a competitive threat at least for the next 1 to 2 years, okay? In Prime, if you don't know, they launched energy drinks here recently. I just bought a couple from Target. I tried one so far. It's pretty darn good. And this is serious, okay? This is serious. The Prime has all the hype and excitement right now. They got two of the biggest influencers in the world, Logan Paul and KSI, back in the brand. They just did a Super Bowl commercial. It has a lot of hype and excitement around it right now and a lot of publicity. And so I think Prime, you know, Prime in terms of that customer base and like who relates to those, like it's mainly people under 30, right? And guess what? Monsters, if you're talking about the majority of folks that drink energy drinks, it's a lot of people under 30, right? And so when you look at this, it's kind of like, I think some dollars are going to be stolen away from Monster, at least in the short term, by Prime. And the more and more stores they get into, where did I buy that Prime? That was on an end cap at Target, okay? An end cap at Target. So we're talking about, that will 100% steal some money away from Monster in the short term. Monster just went through a situation like this a few years ago. Do you remember Bang Energy? Well, Bang Energy was blowing up. It was super popular. It was everywhere on social media, okay? And Bang Energy was taking actually sales away from Monster, and it was a major competitive threat, and Monster was kind of going through a tough time there in the short term. And then Monster ended up launching a product called Reign, okay? And then they also got into some legal battles with that Bang company as well, okay? And the Bang company, I don't know where they're at now, okay? But they were a serious competitive threat for like 1 to 2 years. And so when you see something like Prime, just understand that could be a serious competitive threat for the next 1 to 2 years. Is it a serious competitive threat to Monster over the next 10 or 20 years? I'm not so convinced of that. But over the next 1 to 2 years, I wouldn't be surprised, okay? And so that's why I'm not ready to buy Monster at this point in time. I could come back to this stock at some point in time, but just not right now, okay? When it comes to Monster, it's trading at a forward P in, you know, let's call it low to mid 30s right now. I like this baby when we can get it in the 20s, and specifically around 25. That's what's attractive to me around Monster, okay? So my hope kind of here is Prime is a significant short-term competitor along with Celsius, and those ones just kind of, you know, maybe take some market share from Monster, maybe just give them troubles. It adds to a lot of fears around the competition in the space, and it's being very competitive. Stock maybe shoots down to the 70s, maybe a $75 price point, something like that, and maybe at that point in time I kind of step in and just add this as a long-term investment play, as just one of those companies that's just an easy hold. So that's kind of my 2 cents around that, okay? okay? Hope you guys enjoyed today's video. As always, thank you, Meet Fabric, for sponsoring today's video. Make sure you guys check out Meet Fabric. That will be pinned comment down there. That is an absolutely must to take advantage of that. And that will be in the description, also be pinned comment down there. And have a great day.